Good morning, everyone. Morning. It is August 16th. Wow, August 16th. Um, what we got going on here, we'll talk a bit about what has been going on in terms of news, different economies, talking about a little bit of the earnings. Retail earnings came out. Some retail earnings came out. We'll talk about some credit and so on and so forth. So, a bunch of news here this morning. I'll talk about the current market conditions, right? We've slumped a decent bit after we peaked in like mid late July, and we'll see what we have in terms of analysis for then. So, what I'll be looking at realistically here, first and foremost, about a year ago, Beijing and Moscow tooted a new world order, but things appear to be unraveling fast for their economies. Exports, manufacturing activity, and property prices are sliding in China, which has decided to stop reporting the country's rising youth unemployment rate, while worsening debt crises and deflationary spiral are threatening growth. A collapse in commodity-based export revenues and extensive military spending has also weighed on sanctioned Russia, which just saw the ruble fall past the psychologically important level of 100 to the dollar after tumbling 37% year to date. Central bank divergence. While the news has been grim, the countries are responding to their economic problems in different ways. On Tuesday, China slashed a range of key interest rates to shore up its economy, aiming to reignite growth and investment. So it also followed missed payments by the country Garden Holdings, one of China's largest developers of real estate, in a sector that accounts for a quarter of the overall economic activity. On the other hand, Russia's central bank hiked the rates by 3.5 percentage points at an emergency gathering, bringing the key rate to a total of 12%, fearing inflationary pressures that could ripple through its economy. As many Western companies have already pulled out of Russia or are attempting to do so, investors keep a close eye on the impacts of multinationals operating in China. Recent earnings calls from industrial players have flagged increasing headwinds, such as warnings from Caterpillar, DHR, Dow, DuPont, LYB, Parker, Hanfin, and more, realistically. While there is also a chance of positive breakthrough in the US China relations that will lift Chinese stocks, markets reflect the current economic and geopolitical landscapes which have been noted. Realistically, we go through peaks and troughs and cycles of China pretty much coming back. We're so back. And then it just, everything fizzles and doom and gloom. So it's just very, very cyclical in this regard. And I think there could be some good investment opportunity there, but I think people would have to swing it more so than try to hold it longer term. In terms of what to watch, the gloomier outlook means that China will miss its annual GDP growth target of 5% this year as it looks to sort out economic problems. And the first thing that needs to be addressed is the concerns of growing financial contagion and the debt problems that span from local authorities to the government to the central government. Declining domestic demand also means that shortfalls in tax revenue, while weakness in financials could ham Beijing's fiscal policy toolkit to help support the economy. So things aren't looking super uh, positive there, right? Like I said, it goes in peaks and troughs, and the next possible peak could be coming soon with a low risk opportunity in China. In contrast, right, over in the US, July retail sales powered past estimates to rise 0.7% month over month as consumers continued to show resilience and bolstering the economy, and a strong performance from the automotive sector and the health and personal care categories stood out, while Amazon Prime Day further boosted. Um, the retail sales data also indicated 3% GDP growth is possible for Q3, according to ING Economic and Financial Analysis. And though there could be some challenges down the line, economists will also look to release the FOMC meeting minutes today for clues about the central bank's future plan and monetary policy. So we could see a little more slower market activity and action leading into that event. The event is not necessarily something big like the rate decision, but I think a lot of people will have eyes on it. On the retail radar, we also had earnings for American big box home Depot, that ticked up 0.7% to $332 a share on Tuesday after reporting its top estimates. And CEO Ted Decker also noted that while there was sequential improvement in comparable sales, a lot of that was to seasonal recovery for Q2. Home Depot additionally maintained its forward year outlook while costs improved and supplier demanded fewer price hikes. And two other retail giants will report today after the market open, including TJX and Target. So those are a few things to watch, and also a credit watch, right? A lot of this credit downgrading has been putting downside pressure in the market. There are still some worries on the horizon. Realistically, Fitch analyst Chris Wolf warned that dozens of U.S. bank credit ratings, including some of the nation's biggest lenders, are at risk, right? Though it's not foregone conclusion, the caution comment, which pushed financial stocks lower, comes a week after Moody's downgrade on multiple small and mid-sized bank and placed 6 large lenders on watch. So earlier this month, we saw Fitch downgraded the U.S. long-term credit rating, partly blaming erosion of governance. So in terms of movement and news today, we've seen that the market has been dumping the last few days. Tech is not as weak, surprisingly, but we're increasingly printing lower lows on the S&P 500 futures. I'm not trying to pick this bottom necessarily, because if you look at the order flow over the past few days, it's just been constant offer. So I'll be watching this, obviously. There are a few supports that I would say watch on the S&P 500 futures. 4444, right? Those quadruple fours. We also have 4432. We have 4424. We have 4410-ish. So those are some key supports to the downside that I would watch. But realistically, we're under the start of a new distribution under 4458, 59, and I expect sellers to attempt that area, as well as 4468 to 4472. So there's a lot of sell blocks that are still holding and sustaining, and a lot of those blocks the buyers would have to get through, meaning the buyers would have to rebid and push above. Otherwise, you're going to see that continued downside pressure and push down. So I'd be very cautious trying to pick up every single bid unless there is a very strong turning point in the market that shows strong bids are coming in. Otherwise, be very cautious. The sellers have been sustaining a lot of this downside momentum, and they can continue. I think we probably have seen the bottom. Either today we're going to see a peak to the downside and bottom out, or it was yesterday. I don't necessarily think we have too much more downside. A lot of people are getting extremely bearish, but the offer is still sustaining. So I'm not going to be one of those guys to try and just pick the bottom every single time. I've tried it a few times, right? It hasn't worked necessarily. So I'm just going to hold off and see what the data shows me for that potential bottoming in the market. So thank you all for joining me. Good morning, everyone that jumped in. We got MS, my crypto pie, Mary, Victor. Hope everyone is doing well. Thank you for joining me today. We're going to open up our live trading room in just a moment here. We're going to be trading futures with our traders and see what kind of opportunity this market brings. And check out that free course on our website, Futures Trading Course. It breaks down how to read distribution theory and how to read order flow as well. And keep an eye out, because we're going to announce in the coming weeks, we're going to open up our live trading room for everyone. And we're going to be doing a few sessions on reading order flow. So if you're interested in that, keep an eye out on your inbox. We're going to send out an email, and I hope everyone has a great rest of their day. It is Wednesday. Let's see what the rest of this week brings, right? I'll see you guys tomorrow, and I'll see you in our trading room. So thank you and take care.